Meta moving on from the metaverse, making Sam Altman very, very mad. We'll talk about all of the stories as it relates to Meta and AI. Amazon scaling up their autonomous vehicle program. We'll talk about that. And Tesla on the verge of launching theirs. We've got a lot of news to cover, including the first small cap pick over at Equity Empire officially doubled in less than 90 days. We've got a lot to talk about. Kick things off like we always do with Meta Platform. Start of the week at 697. This one drifting lower by about 2%. The finished week at 682. Meta discussing making big moves, including potentially buying the popular search engine AI app called Perplexity. The two companies came together and tried to work out a deal, but decided to walk away. This preluded, is that even a word? But this came before the company announced the Scale AI deal that we talked about on last week's show. This was like a $14-15 billion deal for a 49% stake. But there was more to the story as it relates to Scale AI. This was essentially an acqui-hire for Meta to acquire the CEO of Scale AI, bring him over to Meta, put him in charge of some very important projects that Meta has going on, not only kind of in front of investors and the public, but also behind the scenes as well. And now their biggest customers are going to part ways with Scale AI because now they realize that Meta is going to be able to poke around and see everything that they're doing, and they're all competing to create generative AI and super intelligence. Google walking away. OpenAI plans to walk away as well. Now, for many of you, you just are connecting the dots as these stories unfold, but our free content, our free Substack. Many of you can't afford an Equity Empire subscription, and by all means, if you can't afford it, I am not asking you to pay for it. But our free content over at Substack and our premier free newsletter is always going to be on Substack. This was sent out a week before a lot of this news came that OpenAI and Google are not going to use Scale AI anymore. We told you that that was going to happen on the free Substack, and we told you the company that is likely to benefit because they have a portfolio company that already does exactly what Scale AI does. And so when Google walks away and OpenAI walks away and many of the other clients walk away from Scale AI, and eventually that company is just going to get shut down, that's going to open the door up for other companies, including a small cap stock that we've talked about already on the channel. Speaking of Equity Empire, guys, the first small cap pick has doubled. There's blue chip stocks up 10, 15, 20, 40, 50% just over the past 30 to 60 days. Now, the price is going to go up. Right now, the early bird offer gets you blue chip stock picks, small cap stock picks, and you're also going to get access to a trading service. Equity Empire is a done for you. We are trying to attract people that are professional, that have a lot of money, but don't have a lot of time. You can't poke through the documents. You can't connect the dots like we did after the Scale AI. We're going to do that for you, and we're going to position you in the best investments possible. You get a combined 50 plus years of experience buying and selling stocks, not only in our own personal accounts, but also hedge fund experience, making these recommendations to the public. These are all skills that we have at Equity Empire, and this is what we're offering to you. The early bird offer that gets you access and grandfathered access to all three services will be going away soon, and the price will be going up. Thank you all that have already signed up. We really appreciate your support. The support has actually been overwhelming, and we really, really appreciate it. Now, Meta is using $100 million signing bonuses to poach OpenAI employees, and Sam Altman got on a podcast, essentially revealed this, and was a little salty about it, which is really interesting because we're just a few weeks removed from Sam Altman buying Johnny Ive's company for over $6.5 billion. So he does a $6.5 billion signing bonus, and then Sam Altman gets on a podcast and sounds quite salty about $100 million signing bonuses. Now, my sources say that this is exaggerated. $100 million signing bonuses, while for an executive level is not unheard of or completely unheard of. My sources tell me this was a huge exaggeration, that Meta is not cutting $100 million checks, because I guarantee you, if they're waiving $100 million checks, there's nobody in Silicon Valley that wouldn't take that. Sam Altman could talk about mission and all these other things. $100 million gets anybody in Silicon Valley to move to the next company. Guaranteed that. Now, Ads are coming to WhatsApp. Now, I don't use WhatsApp a lot. I used to use it a little bit more, but I don't use it as much because I'm not communicating with those people internationally anymore. They're back here in the United States. But apparently these ads are going to appear in the updates tabs under status. And then if you just use it as a communication kind of text message app, apparently you're not going to get served ads yet. Now, Meta's still making big news. I mean, Meta was kind of a sleepy company for a while. They made that pivot to the metaverse. That didn't go so well. It seems like a fire is lit under this company as they are going to partner with Oakley to unveil more AI glasses. This lovely young lady has a pair on here. These are relatively popular. These are a niche device for Meta and probably moves the needle just a little bit, but as it relates to other companies like Apple and other device companies, this might not move the needle from a sales perspective enough for them to get into this thing, but Meta making big moves here, and Ray-Ban's had some success, Oakley as well. Moving on to Apple. Start of the week at 198, up pretty good today, up 1.8%. I was in a levered ETF because I've been showing you the technical chart for Apple for 2 or 3 weeks, and I'm like, Apple's a buy. And so I've been trading it, not the underlying shares, but they've got this is not financial advice at all. They've got these 2X ETFs in Apple, and I've been trading that. I probably made enough to buy dinner tonight. Shares are up about 1% to finish the week at about 201. Now, they are mulling using AI to design their in-house chips. Now, this headline is obvious. Everybody's going to be using AI to do a number of different things. But one thing that goes under the radar with Apple or is ignored or is overlooked is probably the way I'm trying to say it, is the fact that their custom chips over at Apple, this has been the success of Tim Cook over his history of being the CEO. Their MacBook chips, the chips in the phone, the fact that they've transitioned a little bit away from other companies like Qualcomm, certainly Intel, they've done a fantastic job there. They've nailed the hardware. And so that gives you a little bit of clues of where Apple's competitive advantages lie. Also on the Substack, I posted an article earlier this week about Apple and that they missed the biggest tech shift in a decade with Siri not working with AI and other features not working on the phone. But I note that it actually doesn't matter. And so our free content is better than a lot of the paid stuff. And our paid stuff, like I said, the first small cap has already doubled. Trump Mobile is getting into the cell phone space, and they're launching this T1 phone that essentially will be made in America, although I think they advertise it as assembled in America. For something to be assembled, I think you can put it can all be made in China, be brought back here, and you can screw in 4 screws. That might be a slight exaggeration, but it's not much. But you can then say, hey, it's made in America, or it's assembled in America. It comes as no surprise that these phones are made in China, but I would urge you, and we'll have other stories as it relates to other stuff here, the fact that you have Texas Instrument investing $60 billion in U.S. chip manufacturing. Just a couple of years ago, no high-end computer chips from a semiconductor perspective were made here in North America, and very, very soon in the Arizona facility, all of the chips that are consumed by America are going to be made here in North America. So forget all the talking heads on CNBC and a lot of these liberal networks. They'll tell you, oh, they can't make phones. Apple can't make the phone here in the United States. Trump can't make a phone here in America. They can't do it in 2025. They probably can't do it in 2026. But I promise you, if they wanted to, within a few years, they actually could. What is the profit difference between here and India or China or other parts of the world? There probably is a little bit of difference here, but you can make these devices here in America. It is possible. The semiconductor industry proved that. I promise you, putting together a semiconductor is exponentially harder than putting together a cell phone. And if Apple wants to build them here in America, or if Trump Mobile wants to build them here in America, in a couple of years, they can pull that off. Now, we're seeing iPhone strength. This is according to UBS. We're seeing some other data when we're looking at the China data, which is released monthly, and other kind of survey data. It does appear that you are seeing some strength in iPhone sales, and this is also having me bullish, at least in the shorter term, technically for Apple, but probably as we head into earnings, we're like 30 or 40 days away from earnings on Apple. I think the expectations are very low for this company, but if they have iPhone strength, that'll give you the surprise to the upside. The stock will probably move back to the top of the channel. Now back to Amazon. Start of the week at we'll call it 212, down about 1.5 to finish the week as my charts are changing on the spot here, down to, we'll call it 209. And now they are telling staff to relocate near managers. This includes great cities like Seattle, Arlington, Virginia, and Washington, D.C., but this is likely to cause some people at Amazon to quit because you're going to have to move from the comfort of your own environment to one of these cities, which you may not want to do. It is all a plan for Amazon to continue to reduce its workforce as generative AI will lead to efficiency gains and reduce the total corporate workforce. This is what we are seeing across the board. A week or so ago, Oracle reported earnings, and nobody watching this video is buying anything from Oracle. None of you are calling Oracle on the phone and buying any of their services. Now, you're using it on a regular basis. You might even be using this as you're watching this video in terms of database and servers and all that type of stuff. The people that are investing in AI are not you and I. It's not our grandmas. It's not our moms. It's not our brothers and sisters. It's not even our children. It's corporations like Amazon that are seeing huge efficiency gains, reducing costs, reducing headcounts, reducing their overall footprint as it relates to HR. That saves a company tons and tons of money, drives up EPS, drives up shareholder returns, and that is who is investing huge into AI. That is another thing that I talked about on the free Substack, that Apple missed the boat here, but Apple isn't in a corporate enterprise company. A lot of these other enterprise software stocks very, very much tied to these efficiency gains. Now, a big news out of the Robotaxi, as you've got a great facility out here in Hayward, California, as Zoox, which is Amazon's version of a Robotaxi, if you will. These things are kind of like maybe buggy or bus-like, not a full-size bus, but these things are kind of a mass transit take on the Robotaxi, and Amazon coming in big, Waymo expanding their service range in Los Angeles and San Francisco. It looks like they're coming to New York as well. This is becoming a major, major story, and you have major companies, Amazon, Google, and Tesla, with major money and user bases behind them coming. Should create some awesome opportunities from an investment standpoint. We'll talk about it more when we get to Tesla. Custom AI chips also continue to be a big story. Obviously, with Broadcom, there's a handful of others. Amazon has its own lab that designs them for them. These are the Graviton, and they also have a Trainium chip. They continue to release iterations on these things, and they offer them for very, very competitive prices on AWS. So that gives the company a little bit of a competitive advantage. Now, a big story this week that pretty much nobody is paying attention to, and we'll talk about it also when we get over to Netflix as well. Disney and Amazon joining hands to boost an ad partnership, as those two companies serve a lot of television ads to streaming platforms. In the case of Disney, kind of traditional cable. Roku gaining 10% just over the past week as it created another partnership with Amazon. Here's who's going to win the streaming ad game, because Netflix has an offering here as well, is those ad platforms that are not for the Procter & Gamble's and the Pepsi's and the Budweiser's and the top of funnel. If you can create an ad platform where I can run ads for Equity Empire or Investor Channel or whatever I have going on, if I can log in and get them shown on Disney and Amazon. I know that exists a little bit today, but it's not as easy as setting up a Facebook ad or a Google ad, for example, or even a YouTube ad that appear here oftentimes on the video. I believe, and my information believes, that Amazon and Disney and Roku and Netflix, they're all working on that. And that's going to unlock some huge opportunities. Now, they're expanding Prime Day to 4 days for the very first time. I remember Prime Day was literally like a day. It might have been 2 days, and then it's gone to 3 days. They must have data over at Amazon that extending this over the course of several days will benefit them. For me, it seems kind of interesting when it's just a single day, but many people that are busy might miss out. And so extending it to 4 days for the very first time could drive some more sales. Amazon always puts out a press release after Prime Day, usually saying, hey, it was the biggest and all this type of stuff. It does move the needle for the company financially, and it will show up on their quarterly results. Moving on to Netflix, start of the week at $12.25, and I swear, I don't think I've seen this stock go down in like a year. Maybe 2 years, 3 years, 5 years, pretty much forever. It was up another 1.6% to $12.31. My son's saying, Dad, you just buy great stocks and you hold them, and it does well. Now, TV viewing on streaming surpasses broadcast and cable for the very first time. This comes as no surprise to anybody under the age of 60. Watching streaming surpass cable has been watching kind of this slow moving train wreck for the cable industry. It's been well telegraphed. If you look at the stock prices and the stock performance of anything in the traditional cable space, it's absolutely terrible. And obviously Netflix has absolutely taken off. A similar type of thing is going to play out in other industries when we start to look at robotics, when we really start to look at the autonomous vehicle space. It's a slow moving train moving in the direction of Uber and Lyft. The fact that you have these large companies that will likely gobble up huge amounts of market share. They're already doing it in places like San Francisco and LA. They're going to gobble up huge market share globally with autonomous vehicles. So just like TV streaming eventually chewed into broadcast and the internet chewed into traditional kind of newspapers delivered at your door, similar types of things happen. And just as an investor, you want to be aware of it. And look, over on Equity Empire, we talk about stuff like this a lot. These shifting trends that happen, and you just don't want to get caught on the wrong side of it. You would not have wanted to own a traditional cable provider, but I tell you what, there's a lot of investors who have made that argument and that streaming wasn't going to take over, and Netflix proved them all wrong. Now they're slipping into live TV as well, as Netflix does a very good job testing something like a Mike Tyson boxing match or something like that, or running one NFL game on a Christmas or a couple of them, and then boom, putting their full weight behind that. And eventually Netflix is going to be, it's already one of the biggest platforms out there for streaming video, and it's going to get even better. They're also putting some infrastructure into physical locations called these Netflix houses. It's coming to Dallas, Philly in late 2025. And then in Vegas, you get one for 2027. I believe in the MGM Grand as well, there is a Netflix Bites, which highlights a lot of their cooking shows. You're able to go into this restaurant and it is a themed Netflix thing. I believe that is in the MGM Grand. Moving on to Nvidia. Start of the week at 144. This, like a lot of stocks, just kind of drifted down, but finished the week roughly flat at 143.78. Now, Foxconn and Nvidia are mulling the deployment of humanoid robots at a Houston AI server manufacturing facility. So they're going to be manufacturing these AI servers here in America or here in Houston, and they're thinking about doing it with humanoid robots. My information is telling me that China is well ahead in the humanoid robot space. They obviously have a lot of the rare earth magnets, a lot of the moving parts, a lot of the manufacturing that is required to build robots and assemble them. So they already have that piece. They're putting together the computer vision part. They have a huge electric vehicle business that is flourishing in the country. So that gives you a lot of battery technology as well. And so Nvidia potentially partnering with one of the great contract manufacturers of the world, Foxconn, to bring humanoid robots. This is going to be a giant story as we move into next year, but it'll really kick off later this year. I'm anticipating, this hasn't been announced yet, but I'm anticipating Tesla having an event towards the end of the year, probably October or November, where they show off their Optimus. And once they show it off, that's when everybody will start paying attention to it. Now, Broadcom and Nvidia should benefit from co-packaged optics technology, and this is absolutely the case. And if you don't know what co-packaged optics are, you have two options. You can either go down the rabbit hole, use AI, use Google, and use the time that you have to research co-packaged optics, because there's about a dozen small cap stocks that are very well positioned other than Broadcom and Nvidia to benefit from co-packaged optics. Or you can sign up for Equity Empire. In fact, the small cap stock that doubled over the past 60 days was a co-packaged optics stock. And so John McHugh, who picks our small cap stocks, he's not just a small cap guy. He's not just a trader, but he's an expert in co-packaged optics. So you can either research this stuff yourself, spend the weekend doing it, spend the next couple of weeks figuring out what co-packaged optics are, which companies have a product that can benefit, or you can pay Equity Empire and we tell you exactly what company to buy. And over the past 60 days or so, that company doubled. Sovereign AI, otherwise known as kind of like government AI, is going to be a big story for Nvidia, because Nvidia offers kind of a complete rack system with networking. Now, when you go to like the Amazons and when you go to Microsoft They don't necessarily need Nvidia's complete offering because they have special need cases for different types of networking, different type of configurations. Obviously, like Europe and the United States, they don't have a bunch of server engineers. They just want to buy some AI servers, have them dropped into a data center and have them work. Nvidia has a complete end-to-end solution that offers that. And so they're going to benefit over the next couple of years as it relates to sovereign AI. These large countries having to invest here for their military, for just public service and all those types of things, public research. Nvidia is going to benefit big time here. Not only do you have the government or the taxpayer writing the check, which is always a check that is nice to get when you're a company like Nvidia, but again, they are obviously the dominant leader as it relates to AI infrastructure, high-end AI infrastructure, but they also are the only company with a complete end-to-end computer chip CPU networking bundle that countries can just buy and then drop in. And so a fair amount of business for Nvidia over the next couple of years will come from that. Moving on to Google, start of the week at 175, drifting down by about 4.8%, finish the week at 166. I needed to hit refresh on my screen. Now, this is as Google introduced Gemini 2.5 Flash Lite. Can you name, I would give you $100 right now if you could literally name all the Gemini AI models that exist. It seems like every single week there's a 2.5, there's a Flash Lite, there's a Flash Mini, there's all this different stuff. I think these companies are going to have to clean this up from a branding perspective. There's not like two different Google search engines. You know what I mean? Like there's Google. Okay. And the way they're dividing this stuff up is a little geeky to me. It's a little computer science based rather than consumer friendly. But one point that I was making earlier is the people that are using these models are really corporations. It's employees. It's not Grandma Joe. It's not necessarily our kids. They know where to find these things if they need them. But I think some cleaning up from the consumer side could help. Google just continuing to obviously progress there. Now, we talked about this when we got to Netflix, but we forget that the #1 streaming platform is where you get the Investor Channel and the FAANG Stock Recap Show here every week. And I guarantee you, if YouTube went public, you'd probably get a valuation pretty darn close to $1 trillion. You might recall that Alphabet or Google made an offer to buy a cybersecurity company called Wiz. This was maybe about a month or two ago for $32 billion. It was a major acquisition, made major news inside the cybersecurity space, and that appears to be under scrutiny from antitrust review. So we got Lena Khan out. We got, I don't know who's in charge of the FTC these days, but it doesn't look like anything's changed over there. Moving on to Microsoft. Start the week at 478. And as I refresh my chart and cut that part out in the editing process, Microsoft finished the week roughly flat at 477. You're going to see this one technically. We broke out from that 460 level. Now you're going to hover there and maybe do a back test, break through that level, create some good buying opportunities. Now, lots of drama as it relates to OpenAI. Microsoft, it seems there's tension in this relationship. It was a beautiful move. Microsoft making a power move into OpenAI right when they launched late 2022, I believe. But now it appears that relationship is starting to sour a little bit. And it could potentially walk away from OpenAI altogether, not the investment. I mean, they're going to cash in pretty nicely at some point. It'll put a big cash boost to Microsoft at some point. And maybe that's what's being priced into Microsoft stock, because you're going to see this one technically. You're like, well, why is Microsoft basically at the top of the range? I know a lot of these stocks are at the top of the range, but stocks like Apple aren't, many others aren't. One of the reasons why is if you walk away from this deal, Microsoft owns like a 49% stake in OpenAI, not maybe necessarily the whole company, but maybe a part of the company. They own a big chunk of it. And if OpenAI is worth hundreds of billions of dollars, which it likely is, well, that would move the needle for Microsoft if they divested away from that. Now, they are upset with ChatGPT selling at a discount as Microsoft sees this potentially negatively impacting the company. Also, there was this Windsurf acquisition. Windsurf is a coding startup that may potentially compete a little bit with Microsoft's GitHub. And so Microsoft, it looks like maybe they want fuller control or more control over OpenAI. And OpenAI is like, no, we're going to do the things that we need to as a company. The two looks like they're having maybe some behind the scenes type of stuff. And we'll see how this potentially works out. Now, they are potentially letting go of thousands of sales positions as a fiscal year winds down for Microsoft. last month, Microsoft said they were going to trim by about 3% or about 6,000 global employees over at the company. I saw some people speculate that, well, this must mean that Microsoft sales suck because they're letting go of sales position. Maybe not. I know that the CFO, Amy Hood, over at Microsoft, it's very impressive to run through Microsoft's year-end financials because it almost balances off to the dollar. And for a small business, that's not that hard because you're not talking about a huge amount of money. For multiple billions of dollars, for Microsoft to be able to pull that off is very, very, very impressive. And I think that's just what you have going on. You have a very conservative CFO over at Microsoft, not from a political standpoint, but just in the way she operates the company from a financial perspective. She's very good at allocating shareholder money and not wasting it. And I think that's more what you have here. AMD benefiting from a Microsoft partnership where they're going to power the next generation Xbox consoles. This would have been a huge loss for AMD because they essentially power the current Xbox and the PlayStation as well. Initially, you get this huge ramp though. And so that's probably AMD stock is actually doing quite well over the past month or so. Shares are up over 13%. Some of it is probably being priced in the fact that they'll likely win the PlayStation. They're going to win the Xbox. And so this creates a huge lump of revenue that is likely to come maybe towards the tail end of next year, but probably 2027. Moving on to Tesla, start of the week at 318. And we'll do a jump cut as we're up 1.5% this week on Tesla to finish the week at 322. Showrooms opening up in India next month. I tell you what, if Tesla can get control of that market, you'll have the Chinese probably come in there as well. But depending on how this goes for Tesla, as they're seeing their sales slump in Europe, slump here in North America, if they can bring online one of the most populous countries in the world, that'd probably be a good thing. Now, very, very underrated story here. The fact that Tesla signed up over $550 million deal with the country of China to offer what it calls a grid scale battery storage product. Tesla is one of the only companies in the world that has this product. If you're not familiar, in China, they obviously have a lot of people and a lot of ground to cover, but they've invested heavily in solar. And so obviously when it's nighttime, it's hard to power or harness the power of solar. One way to do that is you capture the solar energy during the day. You put it in batteries. They're doing a lot of this out here in California. You can do it on an individual level as well. I will likely do it in the home I'm in now at some point. I don't have a huge need for it. I also think in the future, your electric vehicle sitting out in your driveway, essentially the Cybertruck already does this, where you can power your Cybertruck with your solar during the day, store the energy in your Cybertruck, and then at night, you can actually pull the power out of your Cybertruck and power, not necessarily maybe like an AC for a full-size house like this, but during the springtime, the mild weather that we have out here in California, I certainly can power my house overnight with a refrigerator and maybe a ceiling fan going. That's on the individual house level. You're obviously having countries and cities and municipalities doing this as well on a larger scale whenever there's huge amounts of solar. And so this is a huge opportunity for Tesla. If they can dominate this market, there's other domestic providers in China, but Tesla has a lot of technology and a lot of capabilities as it relates to this grid scale stuff in terms of storage. They use it across the world, and Tesla has a huge opportunity here because that's one of the only businesses that is actually doing well for the company at the current time. Now, Musk, with his X Corporation, which incorporates both his AI and Twitter, or what was formerly known as Twitter, they might eye an investment and trading platform, maybe coming at sites or platforms like Robinhood, which I really like the interface of, Schwab to a lesser degree, the Fidelities of the world. Be very interesting. As somebody that sells financial services and creates financial content, the more people out there doing this, it would be absolutely fantastic, I think. Tesla is being urged to delay their Robotaxi launch by Texas lawmakers. Here's what you have. This is so important. Here's what you have to understand about this stuff. They will say, all the lawmakers will say, this is all about safety. It's not about safety. It's about the taxes that car dealerships pay. It's about car registration. That is huge. That's a huge fee base for governments. What they are, and the lawmakers are smart. They are realizing that when robo-taxis and cybercabs, or whatever you want to call them, are prolific and are widespread, you have much less need to own a car. Some of you that are single, some of you that are on a slightly lower budget, you might not even own a car. Many of you that are like me, You've got a family, you're probably always going to have a car, so you can put some car seats in the back and those types of things and be able to get where you want to go. But maybe you don't need 2 cars. Maybe you don't need 3 cars. Maybe when your kid turns 16, 17, 18, they don't need a car. That means less tax revenue. That means less car dealerships, which are big donators and big tax generating revenue things. That is what these lawmakers are seeing, because the stats prove that these robotaxis, while they're certainly not perfect, they are safe. They are safer than human drivers. I know I've been critical of Tesla and said, hey, I'm not going to put my kids in the back seat of this thing and let it go. That's as a parent speaking that absolutely loves my children. Now, if some of my family members, which are bad at driving, or my wife's in this other room, so I got to say this quietly, or if my wife, given the option of my wife driving or the Tesla driving my kids, I'm probably picking the Tesla. It is a better driver and it's safer. The lawmakers know this. Everybody knows this. You probably have some pressure also from the Ubers and the Lyfts with the Uber drivers and those types of guys that generate revenues from these things. You've got food delivery that'll eventually be autonomous as well. It's a huge shift. And so the lawmakers are trying to kick it down the road as long as they can so they can write some laws and tax the robo-taxis and tax all this stuff, because they're going to get their hand in that cookie jar one way or another. XAI is seeking $4.3 billion of new equity funding. I could think if you can write a check, you probably could get in on that. And we talked a lot about robo-taxis. You've got Amazon, you've got Waymo's doing an absolutely fantastic job. Every company is going to have something that they offer and do well. Even the Ubers and the Lyfts to a lesser degree will be able to play in this market a little bit, but it's going to very much broaden out. I don't think you're going to have one winner take all here. It's not going to be like Tesla or Waymo. It's going to be Tesla and Waymo and Amazon and another company. There's enough market here. There's going to be certain regional type of things that some of these companies do things better at. Tesla has some advantages. Waymo has some advantages. Where I wouldn't want to be sitting is the Ubers and the Lyfts, because you are still going to exist, but your market share is going to shrivel up and your ability to grow is going to shrivel up. And that's going to be very, very, very bad for the stocks. Moving over to technical segment of the show. This looks absolutely fantastic. You're just walking your way back up to the highs on the S&P 500, which are back up here at, we'll call it 6,200. You're a stone's throw away from that. Meta making a lot of news this week from a fundamental perspective. Also stone's thrown away from the all-time highs, we'll say, are back up here at maybe 730, 740 or so. You don't got earnings for about a month, 33 days on these companies. Oftentimes, and you've heard me talk about this on the show, when you move into earnings, you typically want to set up at the top of the technical pattern, or like when we'll look at Apple here in a minute, you're going to set up at the bottom. When you set up at the top, obviously the ability for you to push the stock even higher with expectations already high from a stock price perspective, it's very, very difficult. It's easier to play the game that Apple's going to play, where they're going to be at the bottom and the expectations are fairly low. But with Meta, looks like we're going to walk back to the all-time highs. Apple sitting down here. I've been playing these candles. You see these candles where they hit the bottom and they pop. They hit the bottom and they top. We are wedging out down here as well. This is a absolute beautiful formation. You are going to break to the upside or the downside. I know you tuned in on your hardworking Friday, June 20th, for me to tell you, Apple stock's going to go up or down here. But you've just wedged out here, and so you're going to have a break to the upside, breaks to the downside. I've been trying to play this breakup. We haven't got it, but I've played all these little drops, and I don't hold leverage ETFs over the weekend. You don't want to do that. But you break to the upside on this one. Again, earnings 33 days from now. And so if this one sets up at the bottom, they don't have to have a lot of great iPhone sales for this one to want to pop. Amazon looking absolutely beautiful. Higher highs, higher lows. Looks like we're tracking back to the highs up at 240. Netflix absolutely reached some resistance at the $1,200 level. It's going to be hard to continue to push higher than that. Pullbacks, and Netflix should be bought. Nvidia, we've talked about this numerous times. We thought it was going to get back to the highs. That's where you're at. You don't get earnings for about 70 days, so it's hard to say what would blast you up over and above. You get a blast up over and above, you're probably testing the 170s on that one. Google sitting right in the middle of the range. In fact, just south of that. If you like Google, that is a chance to buy that one. Microsoft has broken to all-time highs, just confirmed a new higher high, looking absolutely fantastic. Folks, there's a green box. This is what you pay for over at Equity Empire. Pay for that patience and the discipline and the foresight. This green box with Microsoft has been on this chart for a while. If you candle or spend some days in this green box, you spend just a couple of days and you bounce out immediately and go to the highs. I follow these stocks. In fact, I lose sleep a lot of times looking at these charts, looking at the stocks, following the news. You just broke to highs on this one. Pull backs to the 460 level. Not the best buying opportunity. Lower though is. Tesla also right in the middle of kind of a upper channel. I mean, this chart actually looks pretty darn good with Tesla. For a while there, it was ugly. That high that we made back in December, though, really broke you out. Technically, you're sitting just south of the middle of the channel. You're looking for a retest on this one back to the 530s, probably by the end of the year. Folks, that was the FAANG Stock Recap Show for June the 20th. Check out the free Substack below. I'm never going to charge for the Substack. Our free newsletter is better than almost everybody's paid newsletter. I see the stuff on Substack people are charging for. It's literally AI regurgitated garbage. Sign up for the free newsletter. If you got a bunch of time on your hand and you can research stocks and you can read and do all this stuff, the newsletter is for you. If you have more money than you do time, you're a family man, you're busy, you're doing all this stuff, and you need somebody just to tell you what to buy and sell, that's exactly what Equity Empire does. Yes, I'll give you updates on QXO. Yes, I'll give you updates on all of these stocks over here. But if you just want me to tell you what price to buy, what price to sell, this is for you. John's doing it on the small cap. And like I said, the very first stock that initial members got access to doubled in just a couple of months. So you can do the math. If you put 5,000, 10,000 into it, it doubled. If you've got a teeny tiny account, couple $100 in your Robinhood account, it doesn't make sense to go with Equity Empire. But a lot of our clients and a lot of people we're dealing with have way more than that in an account. And they just doubled some of their money over the past 60 days. And this goes along with other blue chip stocks and other risk management that we do here over at Equity Empire. Folks, that's the end of my sales pitch. That's the end of the video. Have a great weekend. Have a safe one. We'll see you again next Friday. Good luck with your investments.